Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, February 11th. Well, firstly to the Euro US dollar, and here we see very uninteresting trading for the past 3 days. The final candle that we're looking at here on the chart is a candle that's still developing, and the candle prior to that is the one that has completed trading for today, with another very small body candle, the third in succession, and signifying that there's really very little momentum in net terms between the for the buyers or the sellers in either direction here. It does suggest that there is a possibility of the market testing up to the Tenkan-sen resistance at 114.01, or if the sellers are strong enough to breach down below the swing low here around the 112.70 level, we could see the market testing down to about the 111.60. With this lack of activity here, we're likely to see buyers or sellers coming into the market quite soon, and we know that low volatility situations, and this is a low volatility situation in a very short-term time frame, that they tend to be followed by very strong volatility after that. So the only question is, when will that happen? And what we have to do here is wait for the breakout in either direction. Now, we do have a bearish market in all three time frames, and that's very important. We're trading below the Ichimoku cloud, the Kijun-sen, and the Tenkan-sen. So it suggests that the next move is likely to be to the downside. But we have some barriers here, and obviously that swing low, already mentioned, roughly about 112.70, and then the 111.60 area of previous support and resistance, and the prior major swing low at 110.98, around the 111 area. So at the moment, I think we need to be patient. As this current candle is developing, we are seeing some selling coming into the market, but it really is too early to tell whether we will see further development to the downside. And just looking to the bands here with the Euro US dollar, and we see the market trapped within the bands for the third consecutive day now. And for the 6th of the past 7 days, we've seen the bottom band holding a support, and that's very, very important. It really does highlight that that very strong negative bias that we had in this market previously is no longer there, and it's suggesting that the market may be beginning to transition from that strong downtrending phase into a new strong uptrending phase. Now, what the buyers will need to do is breach that middle band area at 113.82. It has held a strong resistance in the recent past, and obviously will be an important area if the buyers do come into the market, as will the bottom band once again at 112.64 if we do see some minor selling for the Euro US dollar today for this new candle. Moving next to the US dollar Japanese yen, and here we've seen some strong follow through following the bullish breakout up above the Ichimoku cloud. So this gives us a lot of confidence in this move. It suggests that we do now have a strong bullish bias in that longer term time frame, with the market breaking out up above the cloud and the buyers continuing with strong control, and we now have a bullish market in all three time frames. And at the moment, as at the close of that white body candle, we do have confirmation of upside momentum and confirming that we certainly could see the market trade to higher levels. Now, the problem here for the buyers is going to be the strong resistance around this 121 region. The market had tested there on 3 occasions in the recent past, and we then eventually saw very strong selling coming in on that third occasion that the market tested there. So that's going to be an important level, as will the area just above there at 121.14, and then the swing high at 121.84. Now, if we do see any selling coming into this market, into the US dollar Japanese yen in the next day's trading, as we are seeing at the moment with this candle that is developing, looking to the 119.85 level to hold a support, and we should see very strong support around the 119.20 level, and then at the top of the Ichimoku cloud at the 119 area. And just looking at the bands here with the US dollar Japanese yen, and here we saw the prior squeeze going on. We saw some bearish activity below the lower band, the market testing to within the bands and finding very strong support at the lower band, and then bouncing off there and breaching the middle of the bands, which was holding a strong resistance. So we saw the market transitioning from the beginning of a potential strong downtrending phase, which, by the way, didn't see any strong bearish follow through after that one bearish candle of activity down below the lower band. But we saw the bullish breakout out above the upper band after the bands had squeezed up, the upper band holding a support, and now the strong bullish follow through, suggesting that we have a very strong bullish bias in the US dollar Japanese yen once again. Any retracement could find strong support at the upper band at 119.13 at the moment, but I suggest that a lot will depend on the market breaching this this resistance around the this previous area about the 120.82, 121 region. Moving next to the Aussie dollar, US dollar, and here we see the market in a downtrending phase. The candle that has completed trading is the second last one on the chart, and it's formed a lower high and a lower low. So a resumption of that first time frame downtrend, in line with the market being bearish in the longer term, medium and fast term timeframes by trading down below each of the Ichimoku indicators. This negative activity is strongly supported by the Chica span. And as we're watching this new candle develop, we are seeing strong selling coming into the market after some very weak figures with unemployment data. The market has reached the 76-72 level in a strong bearish manner. A lot will depend on how the market reacts around this previous swing low at 76.23, and if we see continued bearish activity down below there, we could see the market continue to trade down to significantly lower levels. Now, there isn't any major support until we see support down around the 73.90 region. So if the sellers have strong and breached that swing low, we certainly could see a couple of very strong bearish candles over the next few days. If we do see the buyers return to the market, and they certainly could do that today, and there's no hint that that will happen at the moment with the sellers strongly in control, but that is a possibility. If that does happen, looking to 76.72 to hold as resistance, and then the Tenkan Sen at 77.49. And just looking at the Aussie dollar with the bands, and here we saw previously the squeeze going on, the bearish breakout, the strong bearish follow through, the lower band holding as resistance and holding as resistance, and then some minor support on weak indecisive candles. The bearish breakout once again for the previous day's trading, strong bearish follow through here today, and the lower band at 77.20 holding as resistance for this current candle that's developing. So it certainly does seem as though we do have a resumption of that very strong negative bias in this market, and the clue here was yesterday's trading with the bearish close, and it wasn't a strong bearish close, but it certainly was a good continuation of the net momentum that was that began for the day prior to that, with that black body candle and then an extension to the size of the black body, and we're seeing the strong follow through today.